Hi, Shae Russell here from Fat Tail Media, and joining me today is Hedley Widdup from Lion Selection Group. Hedley, thank you for being with me today.
Hey Shae, nice to be talking to you again.
Now, welcome back, I've got to say. Now, a lot of subscribers thoroughly enjoyed our last interview, so I had to get you back on for essentially this month's topic, and this is the US election. Now, we're looking at perhaps one of the most divisive US elections in history, or at least in recent memory. Now, the US tend to think they're the epicenter of the world, but does the US election actually matter for Australian investors, or is this just a blip for us?
Well, you're right. The Americans do think they're the center of the universe, not just of the globe. And it's the story of this month. It's probably the story of last month, and it'll be the story of next month and possibly December as well. So it's fascinating the way it shapes the media. But I mean, I look back at many US elections which have had levels of contention and switching from one side of politics to the other, a divisive or really polarizing character coming in, and very few of them have had a lasting impact on markets. Now, presidents do shape economic policy, and that's important. But if you were to look from one day before to one day after, or even, in weeks leading up to weeks after, the markets tend to get really concerned about an event and then take a breather and go back to whatever they were doing beforehand. So I'd say far more blip than, a really momentous changing of direction, irrespective of who wins.
Well, the media wouldn't let us actually think that. They have certainly made a very big deal out of it. All right, so if it's not going to have an enormous impact in the long term for Australians, will the US election shape commodities? Now, this is sort of more your wheelhouse.
Yeah, look, I think I'm not sure that either candidate is going to push commodities in a direction which would differ vastly from what the other would. But I think this election is going to see campaigning and is going to see policy which will have an impact. And both of them, of course, are going to try and shape economic policy to the degree that it suits the American economy, which will have a massive feed on into commodities. Probably different across the commodity spectrum, not necessarily all commodities. So if you're thinking about what will happen in the next 4 or 5 years, I probably wouldn't be thinking about it like you would in the years leading up to the GFC, where we saw just about all commodities rising in unison.
Okay, so obviously there's particular commodities that are going to do well. Now, Australia is basically, held up by holes and houses. So what resources do we have that will be advantageous in this, this next, I guess, fractured sort of commodity cycle that we're looking at?
Yeah, well, look, I think if you look at the global economy, some of the more traditional things, copper, coal, etc., so some of those have got, well, coal, as far as thermal coal goes, has hairs on it from a lot of the green point of view. Whatever your perspective is on that, it doesn't really matter as far as the ethics go. The important thing is that there is a large part of the market that thinks that thermal coal is grubby. And for that reason, I think it's got a real headwind. So setting my perspective aside, that's a challenge for thermal. Copper needs a global economy which is growing and expanding, and it feeds a little bit into the battery side of things. But I think that for copper, we're going to see probably diminishing availability of mine supply, and it's going to be when we really get that biting from new demand before you get a spike in the price. I don't see inflation pushing the price up gradually and the market taking care of itself. I think we'll see a crunch in copper at some stage, but it's going to take years to get to the point where supply is short. I think probably where this election and where America's going and where the global economy is going is going to have the biggest bite on battery style commodities, which is an interesting place to look at. And it's got a bit of recent history, but not too much long-term history.
Well, is there anything else in battery tech, so from a mineral point of view, of what goes into batteries? Is there anything else that Australia is quite strong in? It doesn't matter whether you're pro this new green energy or against it or not. The market is going that way.
Yep.
So from the supply side, what have we got to meet this demand?
Yep. Well, I guess let me just step back to the theme a bit, because this is an interesting one, I think, for a lot of viewers, and it's not something I have a deep understanding of. I like to talk at a high level because that's where my understanding is. Get into details and I'm stuffed. In this case, you've got the world to date has been powered by hydrocarbons to a great extent. There's been shifts and there's been little, segues into different forms of energy, and perhaps we're at a turning point. This is the way that a lot of the economy is starting to invest in the greener side of things, is towards there being a turning point towards greater electrification and storage of energy and moving away from, individual generation via hydrocarbons and things like that. In a hydrocarbon market, those who own oil supply also have access to huge amounts of petrodollars. And that has been very important in terms of the shaping of global influence. The US in particular has found independence from the global market to an extent by being able to become independent in terms of oil supply, particularly in recent years. And that's been a reasonable focus of their economic strength, I would say, over the last 5 to 10 years. As we move into the next few decades, and if you assume that we are moving towards greater electrification, then the control of the supply chain of the things to make batteries, electric cars, solar panels, you name it, start to become pretty important. So if you think about the Saudi Arabias and the Venezuelas being the ones who are important in the supply of hydrocarbons, you're now thinking about, well, who's important in the other side of the supply chain? China is immensely big in terms of supply of solar panels, batteries, as it stands in the market. So they would like to have, I would say, control over a lot of the inputs that go into providing the world with those value-added things, the solar panels, the batteries, etc. And I think America is out to try and challenge them on that. And it's a question of how far ahead is China in terms of its investment. But where Australia fits into that is in the supply of the commodities. And Australia has, very, very large supplies of things like lithium. Graphite, we know, goes into batteries. That was probably the earliest push that the investment market made into the battery theme. Graphite's an interesting one because it seems more like it was the older styles of batteries that used more of it, and the modern, or more recent, I should say, battery styles are probably using less graphite. Nickel goes, it's kind of a quasi old world and new world metal from that point of view, and Australia is a big supplier of nickel. And then there's the sort of trace things like cobalt and rare earths. Rare earths in particular is where China fits into this puzzle really interestingly, because China owns the rare earth market. They have the most supply, and they can use that to be influential in how high power magnets and batteries and other things like that are produced. Australia has a significant, I would say, in a global sense, ability to play in the rare earths market, owing to the deposits which exist and are being mined. There's not many of them, but there is rare earth supply coming from Australia. So, the interesting thing about quite a few of these commodities, though, is that, I think, I've worked as a geologist for 10 years before I came into investment, and you go around looking for gold or nickel or copper or, anything else that we used to look for before batteries existed. And I can't think of too many geologists that have gone looking for all of those things and haven't drilled through a pegmatite, which is where lithium comes from, a graphitic shale, which is where graphite comes from, or a barren ultramafic, which is where a lot of cobalt comes from after it's been weathered, and cursed under their breath. They've probably actually drilled through some of the known deposits for these things, but didn't find it because that wasn't what they were looking for. They were looking for something else. So those things are actually reasonably common. And I think that's where Australia stands to be quite significant in supplying the newly electrified world economy.
That's actually really exciting, because I think it helps put the drama behind the US election into a bit of perspective, that it really is a 1 month, 2 month, 3 month media hog. And then basically we pretty much just get back to business as usual and, move in the direction the market was taking us. Now, speaking of the direction of the market is taking us, it wouldn't be a conversation between you and I if we weren't talking about all things precious metals, where gold's going, where silver's going, and how they're reacting right now. And obviously, any forecast you want to throw out for the future, feel free.
Up. I think this is one area that I think the US election probably does influence the metals to an extent through that period of time that the election is consuming people's attention via the media. And in this case, I mean, we don't see too many US elections that aren't decided on election day. This one probably won't be because of the nature of postal voting and COVID, but also the very, very high likelihood that whatever decision is brought down at some point when votes have been counted, that Donald Trump throws his toys out of the cot and refuses to admit that he's lost if he does. Now, that's going to bring a lot of uncertainty into the market. And, when people talk about uncertainty and precious metals, gold always comes up as being an uncertainty trade, which it is, but gold also tends to trade up in the lead up to something, and then if there's a, if there's a resolution, even if it's a poor resolution, it's almost like the market takes a breather and goes, well, at least we know now. So then there's a bit of weakness that comes into the gold market then. But overall, I think that will be the blip. There is a longer term trend in precious metals which is at play. And as far as gold goes, this isn't my line. I think it's a Rick Rule line. He said that both of those potential presidents are great promoters of gold. And it's not because they promote gold. It's just because they're going to do for the US economy, which is fantastic for gold, which is priming, print all the money you can, because that pushes gold up and up and up. And whilst we're in an environment of very, very low to negative interest rates, gold is going to be strong. I don't think you can use it to price gold. I think you can use it to infer that the trend for gold is going to be positive.
Oh, I like that last line. Use it to infer the trend for gold is positive. And I will just touch on one more subject. And I think this is, all people in precious metals tend to do this. Do you have any particular views on silver at the moment, from a demand point of view, from a supply point of view? I mean, being a geologist, you sort of have a thorough, in-depth understanding of the market. Obviously, it can behave like a commodity and a precious metal. But do you see any headwinds for silver, or is it all tailwinds as gold rises?
The interesting thing about silver is that it's consumed as opposed to gold, which in general sense isn't. I mean, gold does get consumed in things like dentistry and electronics, but it's used in jewelry. But jewelry is 100% available for recycling, so long as it's not buried in a pharaoh's tomb or something. Generally speaking, it's come into the market and it's gone out of the market, but it can come back. So very, very small amounts of gold are consumed from annual production. Most of it is sequestered one way or another. Silver, on the other hand, is consumed to a much greater extent. It's used in antibacterial things. It's used in film. It's got a whole range of uses. And for that reason, silver always has the potential that its cost or value in use will start to impinge on the price. And that often has to trade against this whole silver is a precious metal, so it will trade against gold. And if gold goes up, silver should go up too, because there is the need to maintain a reasonably constant ratio. And if you look back over time, you can calculate an average gold to silver ratio. But silver has often been very, very volatile around gold. So if you find a positive gold trend, you'll probably find a positive silver trend as well, but they're not going to match one for one, and the correlation will be a far less than perfect. So I've observed the silver market. I've seen a lot of positivity coming into it via investors wanting to get access to silver on the basis that it hadn't jumped and gold has. It's started to move now. I think there's a good reason to think that it will, but I don't think that silver can perform to the extent that gold will, because at some point it becomes too expensive for those end users to consume it. And when it gets too expensive for them, they stop buying it and demand comes out of the market.
Wonderful. Look, Hedley, we'll leave it there. Once again, I just want to say thank you for your time, and certainly thank you for your calming insights on what's going on with the US election for Aussie investors.
My pleasure. Nice to chat to you, Shae, and thanks for having me.
No worries.